But if your payment was $1,000 and then you had a forbearance for 12 months, then you would have to pay $2,000 a month if it was spread over
12 months, yeah.
12 months.
You're listening to Central Florida Real Estate Radio with local expert and my friend Laura Petersen. And now, here's Laura.
Welcome back, everybody. With me this morning is Danielle Pume, one of my teammates at Your Home Sold Guaranteed Realty. Welcome back, Danielle.
Hello.
To discuss the sale of your home, you can call 407-566-2555. That's 407-566-2555. So what we were talking about during the break is actually, since we're talking about earlier in the show, obviously what's going on in 2021. And one of the things that we were talking about during the break is actually what's going on with the housing market and all of these forbearances and what happens with that and all of those kinds of things. And so many of you out there might be in this position where you called your mortgage lender in the past, maybe March or sometime since then, and said as a due to the pandemic that you were not going to be able to make your payments for a period of time, and could there be some kind of grace given to you or whatever. And so they offered you a forbearance. And what this forbearance is that so you don't have to pay your payment at that particular time, but that doesn't mean that that payment goes away and automatically gets tacked on to the end and all of those kinds of things. So there's a few options that have happened, and these might not be all of them, but these are what we know exist out there in regards to what has to happen. And if you're in a forbearance situation, my best suggestion is that you are on the phone with your lender and whoever's servicing your loan or whatever, and figuring out what your options are.
Yeah, definitely. And I say it all the time, a closed mouth doesn't get fed. So you definitely want to ask all the options that are available to you, and definitely look for other ones as well. I know that some of them are offering, where you can do a payment plan for the past due. However, you're going to pay the past due plus your current payment. So that's something that you have to, put into consideration. They do have the loan modifications that are available, but that is, again, something you have to qualify for. So if you're being furloughed or your income has changed, there's a good chance you might not qualify for a loan mod. So you definitely need to ask what options are available to you, because we are coming up to the timing, in my opinion, where a lot of people are going to be getting to where that forbearance is ending. I know a lot of them were offered, 3, 6, 9, even 12 months of deferments, and you have to keep in mind, when that's said and done, you're going to be responsible either as a full payment or, like I said, if your loan servicer does offer a payment arrangement. So there's a lot of things that you need to ask them, and like Laura said, I would be on the call with them making sure, what are your options, because the forbearance was great and all, but then you are going to have to pay it back.
Yeah, and so usually they will have an option to pay it back, whether it might be some of them that you would have to pay it over right away, some of it you would have to pay over 3 months, some of it you would have to pay, over 12 months. But if your payment was $1,000 and then you had a forbearance for 12 months, then you would have to pay $2,000 a month if it was spread over 12
months. Yeah.
12 months. And so it doubles your payment, for that next year. And maybe that's something that you can do, and maybe it's something that you can't, but you definitely need to be ahead of it and not surprised when it's going to come to fruition, and figure out what the best thing is for you and your family.
Exactly. Yeah, because it's a big deal, and it's going to change a lot of situations for sure.
Yeah, and so with the market and where it's at, if you had purchased your home at some period of time in the past and you've got some equity and that kind of thing in there, you might have some more options. But as Danielle was saying, if you do get a loan modification, they are making sure that you qualify for that. So you do have to be working and be able to qualify for a loan as if you were getting a new loan almost in that type of situation. And I know everybody hopes that you could actually just tack it on to the end of the loan and just add an extra year onto it, but that's not usually possible.
Correct. Yeah, it's very few far in between that they have programs that would offer that. It all depends on the lender. And it all depends again if you qualify for something like that. So I know that the forbearance, it happened to me a couple years ago when we had the roof situation. I'm sorry, not the roof, but the hurricane.
Yeah.
And I got a roof, and they were like, "Oh, you could do a forbearance," because I needed to come up with my
the money for the roof.
The money for the roof. So I was like, "Oh, that's great." And then after 3 months, they were like, "Hey, by the way, you owe us like $8,000." And I'm like, "Oh my gosh!" So I was not expecting that. I mean, thankfully they were able to set it up for a 3-month payment plan. But again, I had to pay my regular mortgage plus the money that I used for the deductible, and so it was quite different. You know, I went from a little payment to a big payment. So
Yeah.
you know,
And it might only be temporary, but temporary might be something that isn't anything that you can handle.
mm-hmm.